Hey traders, in this video I'm going to show you exactly how you're supposed to structure your trading plan and how my own trading plan is structured. Without further ado, I will let the intro roll and we will be ready to start this. When it comes to having a trading plan, there are two major areas that must be covered. The first area is the strategy area. So when I say the strategy area, I mean the set of technical rules that will bring you to take the trades. And then there is the risk management part, that is the part regarding the risk to reward, and everything that follows. Now, about the strategy rules. The strategy by definition is a set of rules that will bring you to methodically take the same trades over and over again, because you know that you have back tested that by applying these rules you will consistently generate positive returns. Now when I say back tested, I put it in capital letters because I know that it's extremely important, and I will make a video about it, exactly how you're supposed to back test. So if you haven't, make sure you like this video and subscribe to the channel, because I will be posting much more educational content. So as I was saying, this is the definition of a strategy. Every strategy is supposed to be built on an if-then basis. So basically, you will have a set of rules that in this case, in this example, are based on a multi-time frame analysis, which I will also make a video about this. So if your set of rules is actually validated, then you will take an entry according your rules, in this case on the 4 hours, because in the way I see the market, the best way possible for you is to look for direction on monthly, weekly and daily, and your entry must be taken on 4 hours. Now that's my swing trading way of looking at the market, and I will make a special video about it. Going back exactly to this topic, so you need to have a set of rules that are made on an if-then with an if-then structure. So if, for example, the monthly is showing a particular valid pattern and the weekly is showing, for example, that another valid pattern, and both these patterns, let's say they're bearish. So if the monthly is showing a bearish valid pattern, the weekly is showing a bearish valid pattern, the daily is showing a bearish valid pattern, then you will take your entry on the 4 hours according your entry rules. And your entry rules are not only your entry rules, but you will have entry rules that are also that have also included your stop loss rules and your take profit rules. This is very important. You cannot, when you take a trade, you must know where you're going to exit the trade for a loss or where you're going to exit the trade for a win. Now, this particular topic about the entry also includes the risk management. In fact, we will now go to the risk management part, because when you actually take your entry, you must be sure that also your risk management criteria are satisfied, and you also have to adapt your stop loss in order to risk the exact percentage of your account that you want to risk. So basically 1%, 2% or 3%, and you basically want to adapt your lot size to fit that actual risk, and that is a topic I have already covered in my previous video. So when it comes to the risk management it should be at the core of every strategy, because in fact without risk management it's impossible that your strategy will be profitable long term. And again, it is a set of rules that will guarantee that you will have a positive expectancy on your strategy by defining your risk per trade and minimum risk to reward ratio. Now when you have backtested a profitable strategy, you will then optimize your risk management to fit that particular strategy. So as I was saying, both these areas are extremely important. Without the other one, basically the strategy without risk management is useless, and the risk management without the strategy is useless. So you need to have both these areas covered when you're building your strategy. So the first thing is to basically identify a set of rules that you want to be applying when you're trading. That will be the foundation, your technical foundation of your strategy. You need to know exactly what you're looking for when you want to take trades and when you're analyzing the market. You need to have a set of rules that don't let you think too much, but you just apply what you know that is profitable long term because you have back tested it. That's extremely important. These rules, you know that you have to follow them blindly because you have back tested that they're profitable long term. And also these rules obviously are included in what I've just said. And the risk management will follow these rules and will be adapted to these rules. Now, what I suggest for the risk management is always to have a minimum 1 to 3 risk to reward, because that gives a real boost to your strategy. Me personally, I do not take a trade if I don't have 1 to 3 minimum, and almost always my strategy gives me at least 1 to 3. It's really rare that it doesn't. There are two ways to basically develop a trading strategy. There is the hard way, that is you have to really work extremely hard to understand as much as you can from the market, learn as much as you can from the market, and try to find your own edge in the market. Or you can learn a strategy from somebody else, me or any other profitable trader, and you can learn their own strategy. Just please make sure that they are actually profitable traders, and once you're sure, you can learn from them, and that will be much easier. But obviously both paths bring to the same conclusion. The first path will take a lot more time. The second path will be easier. Okay, so thanks for watching. Make sure you like and subscribe for more educational content coming out each week. Let me know in the comments below if you like this video, and I will talk to you soon.